Hey guys, welcome back to the channel. I hope everyone is doing well. Today I want to go over some ETFs that I've been looking at because I want to round out my portfolio and I want to find things that might be a good hedge in the future because even though the markets are doing a lot better in November, I don't expect this to remain this way for too long. I'm thinking maybe like in the first quarter of 2024, there might be a dip just because like people will probably be selling things off just to pay their taxes for 2023 in the States. So let's take a look at a few things to consider. So the first thing is that I still need like a hedge ETF that might pay near the end of the month just to kind of like have like a portfolio that ideally would pay something like every week just to cover myself. And I think sometimes when you look at the news, especially like some of these like financial news, like or like even like YouTube channels, there's a lot of like this, I don't know, like there's like a lot of negative content. And it over time it really doesn't pay to be a grouchy like sourpuss, because one, it's not good for your mental health, and then two, it's not good for your financial health either. Because like for example, if you're like really scared, like even this past October, a lot of people were freaking out and like they moved like everything to cash. And then they missed out on like this run up recently. So some of the things like just to like for example like this is just like a sample of some of the things that I see on like different social media channels, even just like traditional media outlets. Now I get that like the U.S. There's some problems that we still need to work through. But yeah, hey, I mean, think about it. Like, even though like in this, like for example, like this headline, like fed up migrants who truck thousands of miles to U.S. like already heading home. Yeah, I mean that's unfortunate for some people. Like they came and then things weren't like as they thought it were, and then they went back. But don't forget, like people came here, you know, in the first place just because like where else can you really go to really make something of your life. Yes, again, I know that things are not ideal for some folks, but like there's still like a lot of like really good jobs, especially if you're in the tech and certain finance sectors. And I hope that like that kind of spreads through like the other parts of the economy in 2024. But I guess like over the long run, like what's important is that like you give you enough, give your portfolio enough time to compound. And that's why I think like some of these like high yield ETFs are a really good help. But you still need to have like something kind of to hedge them just in case when things go down. You want something that profits just to kind of balance things out. And yeah, I know that the interest payments on like our national debt is crazy, but I mean, like I guess for now there's no alternative, and that the U.S. economy, like the U.S. dollar, it's still the world reserve currency. Just because like there's nobody, I guess like the maybe the closest one would be maybe the euro, and then maybe if eventually at some point, maybe if the so-called BRICS country, if they get the act together, maybe they'll come up with something. But I mean, for now, for like the next few years at least, like I don't see like any viable alternatives. Like the even like I um tend to be a fan of certain cryptos, but even those they're not like they're still not ready for prime time. Let's put it that way. So like I know that things are rough, but like don't get too bogged down. Otherwise, like you're gonna be like me like a few years ago. Like I was so scared that I was buying like gold and silver coins and like stockpiling like canned goods and like that I don't think that's healthy. And besides, like if things was really that bad, like why would people still buy stuff like this? Like I just saw this the other day, like McDonald's coming out with Crocs. I mean, people have enough money to buy this crap, so well, in my opinion anyway. So like I guess things can't be that bad, right? But anyway, Let me go through some of these ETFs. For example, this chaos one that I was looking at, one has a pretty good ticker symbol, so that's always like it's always easy to remember. And the expense ratio isn't too bad, 63 basis points. And let's see how they did like over the course of like because this guy's been around like 10 years. And it's kind of funny that it happens to be like the same like net asset value. So in a way, it is a good hedge, but like I don't know. I guess like there was a chance that. So let's see, like back in kind of like the when we held it the how can I put this like the health crisis. That's when you really saw like the value of like this particular ETF. But then like over time, like it's kind of like sagged back down to like where it was originally when it first started. So in a way, it's not too bad. I guess like the most that it dipped was went down to 70 over here. So I guess it's not too horrible. I mean, considering this isn't meant to be like a regular ETF where you're profiting most of the time, this only really shines. Like if you buy it like before you need it, this could be like a good insurance policy for your overall portfolio. So, but the only bad thing is like when I was looking through this, like it only pays out like once a year. So this isn't like it's not like a yield max fund or anything exciting like that. This is more like I said earlier, it's more like an insurance policy just in case. And as you can see, it makes sense because like you're paying for a bunch of put options on like the SPX index, and then there's like some money put in like some bonds. So but this is just like something on my watch list. It's not something that because I'm still evaluating, and just like on their own marketing material, it's meant to be, I guess, like sort of like as part of a portfolio as a standalone ETF. It's not that great. So as you can see, like they're trying to mitigate drawdowns. So this is more like a disaster um, recovery kind of fund. So the good thing is like it should have a negative correlation since it's mostly put options. And according to this, it's supposed to be tax efficient, but I guess because it's based on the SPX index, so you're paying. All in theory, you should be paying like 60/40 tax treatment, like 60% short term and 40% long term tax rates. But I'm not a tax advisor, so like I'll have to take them at their word on this. And then I was looking at another like Simplify ETF. So SPD is kind of like the SPY plus like some additional assurance when things go really bad. And again, this one's not too bad. Uh, this one might be a good I guess like standalone if you already have other ETFs that I'm sorry, if you don't have any other ETFs and you want something that has like something that might track the SPY a little bit better. But then you also want like some insurance at the same time. This isn't too bad considering this is only 53 basis points a year. The yield it's similar to like the regular SPY where I mean you're not buying it for the yield, you're buying it for I guess like peace of mind. Because like well this one has like instead of using the SPY they're using IBV because I'm thinking they probably bought it because uh, it's a relatively lower expense ratio fund, and then they're also just adding just put options at interesting price points. So actually, it looks like they're also doing um, put put vertical spreads instead of just like regular puts, so that kind of like saves them some money in doing so. This way, they're lowering like the cost of the insurance. So that could be something interesting that I'm looking for, like maybe as part of like a retirement uh, part of like the portfolio. And then this one, like the tail from Cambria funds, um, I'm guessing like this tail, like this ticker symbol means like tail risk. And this one isn't too bad either at 59 basis points in terms of expense ratio. But when I look at the overall performance, it hasn't been that great. Just because it's again, this is I think intended to be part of a portfolio rather than like a all-in-one solution like SPD. As you can see, like since like the I guess it's been around like for around like 5 years. So this would be kind of like a drag on your portfolio just because like you're paying for insurance. So like this is like you're losing like 8% a year. So you better hope that your the other part of your portfolio is doing well because you're paying for insurance here. So similar to like most of the other funds, it looks like they're doing kind of like they're buying straight puts instead of like doing put spreads. So this one that would explain kind of like why the performance isn't that great. But at least they have some treasuries just to kind of throw off some interest here and there. Um, so just to recap, uh, like each of these funds, they might be good for people that are really risk averse, or maybe you just want to do like a tactical trade. Maybe like for example, if you buy it like right before like a nasty down move, you might be able to make some money off of this, and then take like the profit from trading it short term, and then just taking the money and putting it back into your the other parts of your portfolio. And I think the best way to think about it is you don't want to put too much money in each any of these. You want to think of this as kind of like you're paying like any other type of insurance, like for example, like your health or your auto, your home, etc. Um, like like sometimes like these doomers like they make a whole bunch of like ridiculous content so you can watch it, and then like that, but that kind of puts you in a like a bad like mental state, and then sometimes you overdo it, and that's when like your portfolio kind of suffers. I think it's always good to have like a just like a well-rounded portfolio, just to power through like the tough times. So I just want to like kind of summarize and say that just because like your life sucks currently, it doesn't mean everyone else has to suffer. And then that I think there's a better ways to kind of handle like if you're having like some trouble, like maybe like just take a walk and like just hang out with like family and friends. Like sometimes when you dwell on like the negative things, it's not good for you. And even in like the doomers are right, the world can only end once, right? Um, and the track record of like some of these doomers, like they're not, uh, they're not that great. So anyway, like I didn't want this to be like too negative and too down, especially like as we head into like the holiday season. I just want to kind of put this out there just to kind of think about um, kind of like some protection now, so that you can kind of apply it later, like after the holidays. So because like I want everybody to make it, make make as much money as you can. And if you like this type of content, please consider giving it a like and subscribe. If you have any questions, please let me know in the comments, and I'll see you in the next one. Have a great one, everyone.